Hello everyone, this video is for the private channel, and now we're going to quickly go over Bitcoin. What should we expect? Let's start with the fact that I drew this yellow trend line incorrectly. Yes, it kind of makes sense to have it. Yes, there was a retest here, but it's drawn incorrectly. Why? I only noticed it today. Because here I have a regular linear price scale, but I need a logarithmic one. If we draw it like this, then this trend line, well, it just doesn't make any sense at all. That's why we always use the logarithmic scale. And now we'll draw this trend line through these two extreme points. But first, let's turn on the magnet tool. Well, just in case. We just updated the data, and now we understand that this is our nearest trend line. It acts as support, and its potential downside target almost coincides with the green 50-day moving average. This is our markup actually. The levels are based on daily candles, so I suggest we switch. That was the 50-week, the green one. And on the daily candles, our levels are set up like this. And let's see what we can expect from this chart, right? So first of all, the RSI was heading into the oversold zone but didn't quite get there. This suggests that most likely the decline will continue, right? In order for it to play out fully. We have a potential bearish crossover of the moving averages, the 50 and the 100-day averages. But having moved away from these averages, after we broke through them from top to bottom, we now have a chance to retest them and go to the area of about $113,700 to $114,000. That's how it looks right now. It's not guaranteed, but it looks a bit more in favor of growth. Well, where to? To the area of $114,000, let's say, 113.5, 114. I've mentioned this before. Beyond that, there's really no point in going higher, because this range where we were trading, 117,400, 119,800, we've already tested it right here. Although the market is such a mysterious thing that we might go there again, right? That's it. But nevertheless, for now, the scenario we're seeing is a move toward around 113.5, 114,000, and then a further drop down here to about 105,600, and potentially even to the yellow trend line around $102,000, where the 300-day moving average is also located. Now let's take a look at the weekly candles. On the weekly candles, well, here we'll remove all these markings. What did we get? We got 2 weeks of growth here, which engulfed the red week of decline, and technically that was a reversal upward, right? And now, in order to talk about a continued decline to new lows below these levels, or at least down to them, somewhere around $108,000, we need to see this green candle on the weekly time frame get engulfed and a close below $111,100. But I'm speaking very approximately. You can all open it up and take a look yourselves. So, in other words, we need to engulf this candle. Considering that the previous 2 weeks still closed with a decline and with an update of the 3-week or at least 2-week low, well, of the previous 2 weeks, so that's still a bit more to the downside. And again, look, our RSI also hasn't even reached the value of 50, which actually isn't even considered oversold. Let's take a look at the monthly candles. So there's very little time left until the end of the month. Look, this August candle is a strong reversal one. We went down, tested the base of the August candle in September, and then bounced back quite strongly, even making a lower low, because the minimum in August was $107,350, while the minimum in September was $107,255. So this pattern, yes, judging by the candle structure, still points more towards a decline, because right here there's a very strong reversal candle, and again we have a double divergence on the monthly scale here. Let me just take a moment to draw it out for you. Here is one, and here is two. Yes, the highs are clearly rising, but over here, the highs are quite flat, and here they're already going significantly down. So this is a completely clear divergence, and it indicates that the priority for the monthly candles is now downward. Now let's switch to the broadcast charts that I share in the private channel and take a look at them. Let's start by looking at the higher time frames. Look, on the higher time frames, our overbought, oversold indicator has already turned downward. This is, let's say, one of the signs that the trend has changed direction. Moreover, pay attention, there's also a divergence here. At these price highs, the overbought, oversold indicator was at certain highs, but here, at even higher price highs, it turned downward. Again, at significantly lower overbought, oversold values. Well, in this case, it's overbought. This points in favor of a decline. We have a mathematical target for a decline to the area of 81,000 to 75,300. Now let's look at the weekly candles. What about the weekly chart? Well, here the direction of this indicator is clearly downward. There are two downside targets in the range from $102,000 to $89,000. Well, something like that. We've reached a very important level. Well, actually, it's not that important. We should look at the candles close. So we tested 111,980, but the more important level is this one, $109,004. Let's take a closer look at all of this in this small window. So what did we do? Oh no, we also tested 109,000. I got a bit distracted, right? So we closed above this high, but it's not a significant level. The key level is this one, $109,404. Because if we close below it, then our target already shifts to the 104,000 level at the candle close. For now, the situation is debatable, but the RR indicator of overbought and oversold still points in favor of a further move down. There's nothing here suggesting a long position at all. Let's look here. On the daily candles, the situation is now the opposite, and it matches what I said. That is, the RR is pointing upward, right? So the potential momentum is directed upward. We have basic, reasons, let's say, to visit the area around 113.5, 114 to test these averages. Note that the 12-hour chart also seems to indicate upward momentum. The 4-hour chart is already overheated. This suggests that the growth may end, or maybe it has already ended or will end soon, right? And on the hourly chart, there are already downside targets in the area of $111,000, $110,700. And as I gave you in the channel, the strong downside targets are, roughly in the same range, but there are also targets down to $110,400. That's it. And at the moment, the hourly chart still points toward a decline. Well, if you also take a closer look at the moving averages here, the targets roughly coincide with the 50-hour moving average. Because if we assume that a decline is about to start now, it could end up somewhere in this area. But I emphasize the daily candles are now signaling growth, the 12-hour candles are signaling growth, and the 4-hour candles at the moment are still leaning a bit more toward continued growth. And the hourly chart suggests caution, but it has also unloaded and does not rule out further growth. Therefore, I believe that a potentially interesting zone for entering a short position, and globally it's still a short, is around 113,500 to 114,000. But again, we'll need to see what the indicators show and how the situation develops. Because if Bitcoin not only wicks up to the 114 area, but actually engulfs this red candle on the daily time frame and closes above all the moving averages, then that would be a reversal and it would favor further growth. So on that note, I suggest we wrap up for now. My forecast is that growth will reach the area of 113, 500, 114, possibly after a drop to 111,000. But from 114, there is a chance to see a further move down, and this move down could reach the area of 102,000, 105,000, 102,000, and potentially even as low as $80,000. I've said everything, there's nothing more to add. Hugs. See you next time.